You're with us here on Ask Udayan, the show where we answer all your stock-specific queries with our global business editor, Udayan Mukherjee. Do remember to send in your query on the number on the screen. We'll try and take as many as we can every week. Our first question today from Prasad in Mumbai. Let's listen in.
Hi Udayan, I am having L&T Finance shares at an average price of 105 rupees, holding it for last 3 years. I have about 500 shares. Should I hold it or should I exit? Kindly advise.
Well, you've had to be quite patient with L&T Finance because it's a rare example of an L&T stock which has not performed at all last couple of years since you have held the stock. And the reason is that L&T Finance has just not been able to demonstrate the kind of growth and performance which investors expected of it. They took a lot of wrong turns in the wholesale lending space, but now I think the company is going through a major transition. It's trying to get out of the wholesale lending space and focus only on retail, which is SME loans and consumer loans. You can see the clear signs. Recently, they have been cleaning up their wholesale book by selling off some of their non-performing assets to asset reconstruction companies. The issue is how successfully is L&T Finance able to make this transition to retail. If it is successful, then it may pay off to hold this stock for the next year or two. So I think the thing to do for you is, having been patient for 3 years now, is to give the management another 2 or 3 quarters to see or to demonstrate if their shift to retail is actually paying off. If it manages to pull it off, then I think a new retail credit cycle might bring good things for L&T Finance. I'm not expecting the stock to be a rocket in the near term. I think there are better NBFC plays out there. But since you are already an existing investor, I think you might just give the management the benefit of the doubt for another 2 or 3 quarters and see how it is panning out.
All right. Nisarg from Ahmedabad is looking at Heritage Foods. Let's see what kind of time horizon he has.
Hi Udayan, Nisarg Shah from Ahmedabad. Is it good time to buy Heritage Food for 2-year horizon?
Well, Heritage Foods is in the dairy space, and it's a space which I like quite a bit because I think the dairy as a space in India will exhibit fairly significant growth in the years to come. The problem, as we were discussing with Hudson too the other day, is that there is a raw material issue out there in the dairy space today. Because milk procurement prices have gone up such a lot, margins of players like Heritage Foods are getting squeezed over a period of time, and therefore they're not able to grow profitability that significantly. And that's putting pressure on their stock price performance as well. This will continue to be an issue for some time, and the answer lies in actually enhancing the share of value-added products for milk companies or dairy companies like Heritage. Right now, 25% of Heritage top line comes from value-added products, which is not plain milk. And the more they sell of these value-added products, curd, cheese, ice cream, they're able to pass down this raw material or milk price increases to consumers more successfully, and therefore their margins are protected. So I think the thing to monitor for long-term investors of Heritage Foods and dairy companies is how much of their incremental sales are coming from value-added products and how much they're able to protect their margins against high procurement prices of milk. So keep monitoring that. I think it's a good space, but in the near term, stock prices might remain under pressure because of the high milk prices that they're forced to buy at.
Okay, let's talk about Dabur now, and it's Kalpesh from Mumbai that has a query on his investment there. Go ahead.
Hello sir, I am your follower from my school, from my 10th school 2003. I am Kalpesh Patel from Mumbai city. I am holding Dabur share at the rate 450. Should I hold or exit? And I want to know if the crude palm oil export ban from Indonesia, what is the impact upon the FMCG sector, and higher inflation price in India, what is the impact upon FMCG sector? Is it positive or negative?
No, I think all FMCG companies are feeling the pinch of higher raw material prices. There's no doubt about that, Kalpesh. You're right in pointing that out. And that's the reason why Dabur has not been performing over the last 6 months or so, because in line with other FMCG companies, because A, their valuations are not cheap. Dabur itself is trading at a 40 PE multiple. And B, there is an issue of growth and raw materials. Take a stock like Dabur where the urban and the rural segment are almost 50-50, 55-45. And Dabur's problem is not so much in the urban segment where growth is holding up, but at the bottom of the pyramid, the rural segment, which is still 45% of Dabur's sales, I think there's a marked growth slowdown. So overall volume growth, which has been quite strong for Dabur over the last couple of years, in fact stronger than many of its peers. If you look at companies like Marico, Britannia, even Hindustan Unilever or Godrej Consumer, I think Dabur's volume growth has been far superior compared to these players. But now the question is whether it can negotiate the rural slowdown to still continue to demonstrate the double-digit volume growth that it has been exhibiting better than some of its peers. On the other hand, there is the issue of raw material prices, which is also a small kind of an issue. There is an issue with the Turkish lira, and Turkey is an important market for Dabur. There is a lot of volatility with the lira of late, and that poses some kind of challenge. So I don't see Dabur being a huge performer as the market makes up its mind on how to value stocks which are expensive in the kind of transition period that we are going through. So you may get 10-12% kind of growth, and Dabur is one of those steady kind of compounders over long periods of time. So it's a good management. Its market share in products like hair oil, Chyawanprash, toothpaste is all growing. So no problems with the management. The issue is one of growth in rural segment and B of valuations which are already quite elevated, and therefore I don't see it delivering 20% plus kind of returns in the near term.
All right, that's all we could pack into the show today. Udayan, thanks so much for taking out the time to answer all those queries. Do continue to send in your questions to the number on your screen. We'll be back again next Wednesday.
If you like the video, do like, comment, share and subscribe.